Hey everyone, and welcome. Today, we are diving deep into a concept that is absolutely essential if you own, well, pretty much anything of value. Your house, your car, a business, you name it, we're talking about fair market value, the number that tells you what something is really worth. So let's get right to it.
I mean, it seems like such a simple question, doesn't it? You look at a price tag, you see a listing online, and you think, okay, that's the price. But is that its actual value? Well, the truth is, it's usually way more complex than that. And honestly, it's way more interesting too. This is a question that cuts right to the heart of finance, law, and your own personal wealth.
And here it is. This is the answer. Fair market value, or FMV as we'll call it, is the ideal price. Think of it as the gold standard of valuation. It's a hypothetical number, yeah, but it's the price an asset would sell for in a truly perfect world under a very specific set of conditions. And this definition, this is the bedrock for everything else we're going to talk about.
Okay, so let's break that down. You see, the word fair in fair market value isn't about what feels right or what seems equitable. Nope. It's a technical term, and it totally depends on four key conditions being met. If you take away even one of these, you're not really looking at true FMV anymore. Let's see what they are. So, what does this perfect transaction actually look like? Well, first up, knowledgeable parties. This just means everybody knows what's up. No hidden problems, no secret advantages. Both the buyer and the seller are on the same page. Second, acting in their best interest. This is pretty obvious. It means nobody's cutting a special deal for a friend. It's all business. Third, and this one's huge, no undue pressure. Think about a company going bankrupt and having to sell everything off quickly. That's a fire sale, and that is not fair market value. And finally, a reasonable amount of time. You can't just put something up for sale for 24 hours and call it a day. You need enough time to let the market work and find the right buyer. Put all four of those together, and boom, you've got the purest measure of value. This quote right here, it absolutely nails it. Your sentimental attachment to the house you grew up in, it doesn't add a single dollar to its fair market value. The fact you might have overpaid for a stock a few years back, that doesn't change what it's worth today. FMV is totally objective. It's about what the open market thinks, completely detached from your personal feelings or history with that asset. All right, now this is where things can get a little tricky, and it's where a lot of people get confused. You hear all these different terms thrown around, like market value or appraised value, and they all sound kind of the same. But believe me, in the worlds of finance and law, the differences between them are incredibly important. So let's clear this up once and for all. Okay, let's really put these side by side. Market value is just the price you see right now. A house is listed for $500,000, its market value is $500,000. Simple. But that doesn't make it the fair market value, right? Maybe the seller's in a hurry, or maybe buyers don't know about a zoning change. Then you have appraised value. This is an expert's opinion, their best guess. It's often used to estimate FMV, but it's still just one person's professional judgment. But fair market value, our focus today, is that theoretical pure price, the one that assumes all those ideal conditions we talked about are met. It's the true north, the most accurate reflection of what something is really worth. So you might be wondering, okay, if this is also theoretical, why does it even matter? Well, because in the real world, this concept has massive, tangible consequences. This isn't just some textbook exercise. Fair market value is a critical tool that gets used every single day in some really high-stakes situations.
That's right. Make no mistake, governments, courts, and huge corporations all rely on FMV to make decisions that can be worth millions, sometimes even billions of dollars. It gives everyone a standardized, defensible starting point for valuation, which helps prevent things from getting arbitrary and ensures at least some level of fairness.
And just look at how wide-ranging this is. For taxes, the property tax you pay is often tied directly to your home's assessed FMV. In the legal world, think about a divorce. How do you split up a house, a business, investments? You have to start with their fair market value. And you can bet each side will have their own appraiser arguing for a different number. For insurance, if your car gets totaled, the check they cut you is based on its FMV right before the crash. And in business, every single merger or acquisition comes down to one fundamental debate. What is the fair market value of the company being sold? All right, we've covered the theory and the big picture stuff. Now let's bring this right back home. Because understanding FMV isn't just for accountants and lawyers. It's a seriously powerful tool for your own financial life. Knowing this can help you make way smarter decisions and honestly protect your own bottom line. This is it. For most of us, it's the biggest financial transaction of our lives. You're emotionally attached, you've got a number in your head you think it's worth, but what's the right price to actually put on that listing? Exactly. By doing the work to understand its fair market value, you can price your home strategically. You'll attract the right buyers and get what your home is truly worth in the current market. This is how you avoid listing it too high and having it just sit there for months, or even worse, listing it too low and leaving a pile of cash on the table. So you're in a stressful situation, your car's been in an accident, your basement flooded, the insurance company comes back with an offer. How in the world do you know if it's a fair number? That offer they gave you? It's based on their assessment of your property's fair market value just before it was damaged. This is where knowing your stuff really helps. Understanding how FMV is calculated using things like the Kelly Blue Book for cars gives you the ammunition you need to negotiate and make sure you're getting what you're actually owed.
Now, this is about your legacy, right? How you're going to pass on what you've built to your family or to a cause you care about. And when it comes to that, valuation is absolutely critical for all the legal and tax stuff that comes with it. So, whenever assets get passed on in an estate, their value gets pegged to the fair market value at that time. This number is what determines how everything is divided up, and it's also the number used to figure out if any estate taxes are owed. Getting this right is so important for making sure your plan goes smoothly and fairly.
And that's really the question I want to leave you with today. In all your financial dealings, when you're negotiating, when you're planning for the future, when you're making investments, are you really operating with a clear picture of true value? Because fair market value, it's not just a technical term. It's a powerful concept. And once you really get it, it gives you a much clearer lens to see the real price of absolutely everything.